Imagine ETH ETFs as a revolutionary way to invest in Ethereum, much like buying stocks or those ETFs we discussed before. But instead of just holding traditional assets, ETH ETFs allow you to invest in the digital world of Ethereum. This approach to investment is like a new spin on how you can diversify and manage your portfolio, using the power of blockchain technology. I know that might sound like a lot, but don't worry. By the end of this video, you'll have a crystal clear understanding of what it all means. Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation. Here we break down complex financial concepts using a simple whiteboard format, making learning about investing accessible to everyone. Today, we're diving into a hot topic in the financial world, ETH ETF. In this video, we'll explore what ETH ETF is, give you some examples, and discuss the SEC's decisions as well as its impact on the economy. First off, let's talk about ETH, or Ethereum. Ethereum is a decentralized platform that allows smart contracts and decentralized applications, dApps, to operate without downtime, fraud, or third-party interference. Created by Vitalik Buterin in 2015, Ethereum is not just a cryptocurrency but a revolutionary platform in the blockchain technology sector. It enables developers to build and deploy applications on the blockchain, unlocking new potentials for various industries, from finance to supply chain. Next, let's dive deeper into understanding ETF, or Exchange-Traded Fund. An ETF is an investment fund traded on stock exchanges, much like stocks. This means you can buy and sell shares of an ETF on the stock exchanges just like you would with company shares. ETFs typically hold a collection of various assets like stocks, bonds, or commodities, allowing investors to diversify their investment portfolio without needing to buy each asset individually. Furthermore, ETFs come with several benefits. Firstly, they offer diversification. ETFs allow investors to own a piece of multiple types of assets without having to buy each one individually. This helps reduce risk as the price volatility of one specific asset can be offset by the stability of other assets within the same ETF. Moreover, ETFs often have low costs. Compared to buying and managing a portfolio of many different stocks or bonds, investing in ETFs generally has lower costs. ETFs often have lower management fees as they simply track an index or a group of assets. Another advantage is flexibility. ETFs can be bought and sold easily on stock exchanges throughout the trading day, just like stocks. This gives investors high flexibility in managing their portfolios. For instance, consider a technology ETF, such as the Invesco QQQ Trust, QQQ, which tracks the NASDAQ 100 index. QQQ holds shares of leading technology companies like Apple, Microsoft, Amazon, and Google. By investing in QQQ, investors can own a part of many major tech companies with just a single transaction. Additionally, a gold ETF like the SPDR Gold Shares (GLD) tracks the price of gold. Investors who want to invest in gold without buying and storing physical gold can buy shares of GLD. This makes it easier for them to access the value of gold without worrying about storage and security. So how do ETFs work? ETFs work by pooling investments from many investors to buy a collection of assets. The value of an ETF's shares reflects the value of the assets it holds. When you buy shares of an ETF, you're essentially buying a piece of all the assets the fund owns. For example, if you buy shares of an ETF tracking the S&P 500 index, you're owning a small part of the 500 largest companies in the U.S. economy. This helps you spread risk, as the price drop of one company can be balanced by the price rise of other companies. Combining these, ETH ETF is an investment fund that tracks the value of Ethereum and is traded on stock exchanges. This allows investors to access Ethereum without having to buy and hold ETF directly. Instead, they can buy shares of the ETF, reducing the risks and complexities associated with storing and securing cryptocurrencies. For instance, an investor who wants to invest in Ethereum but is concerned about storage and security might choose to buy shares of ETH ETF instead of directly buying ETH. Now let's discuss the SEC, or the Securities and Exchange Commission, which plays a crucial role in approving or rejecting ETFs. The SEC's approval of an ETH ETF can be seen as a positive sign for the cryptocurrency market, as it indicates recognition and trust in Ethereum as a legitimate investment asset. However, this approval process can be challenging and requires stringent regulations to protect investors. A prime example of the SEC approving an ETF is the case of the Bitcoin ETF. After years of review and evaluation, the SEC approved the first Bitcoin ETF, paving the way for traditional investors to access Bitcoin through the stock market. This decision helped increase liquidity for the Bitcoin market and attracted many new investors. Similarly, if the SEC approves an ETH ETF, we can expect a significant increase in interest and investment in Ethereum. Moving on, the emergence of ETH ETF can have several significant impacts on the economy. Firstly, it can attract more traditional investors to the cryptocurrency market, helping increase liquidity and stabilize prices. Additionally, it can spur the development of blockchain-related technologies and projects, creating more job opportunities and innovation. And finally, the popularity of ETH ETF could change how we view and use digital assets in the future. For example, when ETH ETF is traded on stock exchanges, more investors will have the opportunity to access Ethereum easily. This will help increase Ethereum's liquidity, making prices more stable. For instance, if a negative event affects the cryptocurrency market, ETH ETF can help reduce ETH's price volatility by providing a more stable investment tool. Moreover, the increased investment in Ethereum facilitated by ETH ETF contributes to the expansion of blockchain-based projects and companies. Notably, initiatives such as DeFi and NFTs receive additional resources for development, thereby fostering innovation and contributing to economic growth. So ETH ETF is a unique combination of blockchain technology and traditional finance, opening up new opportunities for investors and potentially having a significant impact on the economy. The SEC's approval of ETH ETF will be a major milestone, helping to promote the development of the cryptocurrency market and bringing numerous benefits to the global economy. Stay tuned with us to explore and learn more about the latest trends in this field. And that's it for Ethereum ETF in today's video. If you found it informative and helpful, please give it a thumbs up and subscribe to our channel. Your support will be a great motivation for us to continue producing educational crypto market content for everyone.